What started as a joke quickly became, well, not so funny. I posted this on Twitter, Black Friday sale, haha, but about 35 minutes later or so, I said that it's starting to look actually a little bit more serious. Dow futures were down about 460 points. The Hang Seng was down around 1.79, and at the time, the Nikkei was around 3% down. Today, everything was down. It was the red carpet was rolled out on Black Friday for everybody. And not only in the U.S. markets, it was around the globe that really sold off. All 11 sectors were down on the day. The defensive names kind of took the lead there, healthcare and consumer staples. The week-to-date performance overall, energy and consumer staples and financials led the way, which we had discussed previously, but they did get clobbered today due to apparently the COVID variant concerns. Now, this is almost like the catalyst that kind of triggered this sell-off, but if you've been watching this show, we've been pointing out a lot of different divergences, a lot of interesting things that have been taking place, that it was like the market was telling us and giving us the signs up until this point. Now the question is, hey, is this just a fluke? Is this going to be like, okay, the vaccine works totally fine with this COVID variant. Is it not that bad? And then the market's going to rip to new highs? Well, let's pause on that a little bit. We got a lot of charts to go over in today's video. And, you can come to that conclusion yourself, obviously, but I'm going to kind of present you both bearish and bullish cases here. You're watching the Stock Market Brief Show. My name is Michael Silva. Got Coco on the side of me. She ain't feeling too well today for some reason. Got a little sick, maybe too much turkey. Nah, I'm just kidding. I didn't feed her any turkey. Come on now. Maybe a little bit. I don't know. Let's get into it. All right, welcome back. Yes, so the Dow tumbled about 900 points for the worst day of the year on the new variant concerns, which me personally, I don't think it was really this. I think the market was already collapsing, and it was doing so in front of our faces. It just wasn't showing in the main indices because the indices are really ran by just a few stocks. Now, whether or not this is actually a big deal is yet to be seen at this particular point in time. We have somebody on Twitter posting this. It was a pretty viral post. Breaking! Researchers are alarmed by the spike in cases in South Africa after the discovery of the new variant. And then pointed out the actual spike. And now I responded to this because I looked at this and I was like, that doesn't seem right. There's something wrong with this chart. Because the spike here is what? Like maybe that's 1,000, right? And then you look at 10K right here. And I was like, so I looked up it myself because this looked like more of a 7-day chart, 7-day average. So I don't know if it was showing accurately here. I mean, it shows the daily cases. But when I pulled up the data, South Africa, the last 30 days, just a couple of days ago, there was a 1-day single spike of 18,000. And that is a large spike, actually. That is of concern, especially if you look back at their previous cycles here. That would technically bring that spike up to just below 20, which is around one of their highest spikes. So I don't know. And we're going to find out here soon, probably throughout the weekend or coming up to see if it's more significant. So this trigger was exactly the catalyst that the market was looking for to sell off. And we'll get into some more charts here. More specifically, what have I been talking about? So first off, from a contrarian view, the entire market was full bull mode. Very, 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 like if you're looking at a spectrum from, fear and greed, it was smashed down to greed all the way, right? And we can see that here with the NIAM and the RIDEX. The NIAM has been over 100 for multiple weeks, and this is typically a good contrarian indicator, and it lets us know, especially when you kind of look at things like skew, that's relatively very high, it gives us an idea of the market kind of keeps trucking higher, but as soon as there's a down move, it's a little bit more aggressive. And we saw a little bit more of an aggressive move today. And you can see the RIDEX here, 0.06. So what are they doing with their money? Asset managers, and they're full bull. They're leveraged long. So it's pretty crazy, but if you look at the S&P 500, the percent of stocks above the 50-day and the 200-day, those have been diverging. They've been heading lower, telling us the internals have been weakening, but meanwhile, the market had kept on rising higher, and the same thing with the NASDAQ 100. The percent of stocks above the 50-day and the 200-day kept on declining, but meanwhile, the market kept pressing higher. There was a clear divergence, and divergences, they don't matter until they matter. So people want to find the narrative and find the reason why the market fell that specific day, but the market was giving us signs. It was giving us warning signs clear as day for weeks now. And then you take a look at the BPNDX chart. We talked about this negative divergence. We talked about this heading down to this oversold territory here, and now it's kind of getting to that oversold territory, right? So I think it can extend lower, but that negative divergence, the market kept on going higher and higher, and then we just got an aggressive sell-off. The same thing with the BPSPX chart. Negative divergence started finally selling off. Okay, and then this is the NASDAQ advanced decline line using the 21 and the 50 EMA. When they're above and they're pointing up, and when they're above zero and pointing up, that's good. But when they're down here, we got notified right here, mid-November, and the market kept pressing higher, and we called it out. We're like, there's something weird here, right? And we couldn't put our finger on it. Well, guess what? Now the market started to sell off. It's going to start to sell off more. Well, let's not bring too much fear into this situation until we actually see some key technical levels broken, which we'll get into here shortly on the weekly charts. The NYSE advanced decline line, we've been talking about this negative divergence here. I want to call this out here. This is advanced decline volume line. We're pretty darn overextended there on the RSI. You can see a big move to the downside. That's bringing in a reading of 20.42. Now, the last time we seen a negative divergence in an RSI reading like this, that was the pandemic. Right over here, all right? So we've been there before, and we got continued sell-off. So what I want to call out here is breakdowns. They happen when things look like this. So this is, and we'll kind of wrap this up in the conclusion section here pretty shortly of kind of my thoughts on everything. Excuse me. Now, here's another thing, the new lows. The new lows have continually building, and we've been talking about this. I actually reversed this chart and said it looked like the Island Boys neck tattoo. And the thing is, it's like funny, but the reality is new lows were moving. This means that the stock market, right, the NASDAQ composite, more and more stocks were putting in new lows, but yet the market kept rising higher and higher and higher and higher. So it was just as clear as a day warning sign that we need to be careful. And that's all we say. We got to be very careful, take profits when you can take profits, tighten your stop losses up so you don't get just, whacked or sideswiped when something does happen. And it wasn't that aggressive of a sell-off overall, but like I said, the market's pricing in some pretty volatile moves, and we'll talk about that. New high index here on the NASDAQ. Another thing that we called out was this kept on putting in lower readings, but meanwhile, the market was pressing higher and higher, which is also another divergence. Here's another one. We looked at this, and this is a very random indicator that I kind of just found an interesting correlation to, but when you look at the rate of change between the tips and the treasury bond, so I'm looking at SPIP over GOVT, and I apply a 10-period rate of change, and when it gets up to around 1.3 to 1.4, shortly after, it's been acting as a leading indicator for volatility to rise. And I couldn't tell you why, but I found the correlation and I started tracking it, and it was accurate here, we saw a rise. It was accurate there, we saw a rise. It was accurate here, we saw a rise. And when this one hit, I was like, well, it's happened 1, 2, 3, 4, 5 of the last 5 times. And what do you know? Like, it started sinking off, getting back below on the rate of change, and then pow, we got this extreme spike there in volatility. The NYMO, the NYSE McClellan Oscillator, that put in that divergence that we were tracking. The market continued to press higher. Now it's starting to get pretty overextended to the downside. This is, once again, this is where breakdowns can take place or big bounces, and we'll continue to talk on that here shortly. The NYMOT, this is just a traditional calculation, different way to look at the indicator. That negative divergence, now it's playing out to the downside. And you can see here, it's actually getting a pretty nasty reading. It's below 225. These are also getting to those overextended levels. What I want to pay close attention to is this minus 300 level paired with this individual indicator. This is the McClellan Summation Index. Now, the McClellan Summation Index has also been turning down. Meanwhile, the market's been consolidating, which we've been talking about, right? But it's still above zero. So yeah, we're seeing some weakness come in. Now, why I wanted to point out this indicator with this indicator, let me show you. I'll go ahead and stack them together and give you kind of a side-by-side comparison. When the NYSE McClellan Oscillator, NYSE Summation Index gets below zero, and meanwhile the NYMOT here, this also gets to a minus 300 reading. So when they get there at the same time, we've seen some severe market sell-offs take place. So for example, the last time was right here in the pandemic. The Summation Index got below zero, and then we had the NYMOT reach a minus 300 reading, and then we sold off. The last time this happened prior to that was in late 2018, before that big sell-off that took place. We had the NYSE also get a under zero reading at the same time the NYMOT got a minus 300 reading, and then we sold off pretty severely. The time prior to that was in early 2018, and we actually got a sell-off, then the reading hit. And at that time, we actually bounced, but that bounce was completely reversed over the course of a couple of months and then started moving higher. So it's a time to be obviously very cautious. Now, we looked at the Sailor to Shift rotation tool. That thing triggered early November, and it has been playing out like a charm. We've been seeing some pretty severe sell-side activity take place in the price of Bitcoin and various other cryptocurrencies like, for example, Ethereum. So this, I'm waiting for the next buy signal. I'll be making a new video here shortly, and I'm going to be talking about just my next big buy setup or my next big trade, and it's going to be around specifically this, and I'm going to walk you through individual crypto equities too as well, because I'm starting to think that actually we might be able to generate, or I might be able to generate more alpha on crypto equities on the next buy signal here. Now, it's completely speculative. I still be monitoring risk, but that's for another video. Now, also to note, the dollar has been severely rising in a very rapid pace. Now, this is where things get a little cuckoo. So first off, the dollar's been rising. That was already a red flag as fast it was moving, and various commodities were kind of holding together too as well. But what's so weird today is that the dollar really did sell off severely. That's a big move down for the dollar, but yet commodities, they also sold off. So there's something very interesting taking place right now, and something that you need to be very careful with. So oil, this is just a nasty, down 13% on a single day. This is something that you don't want to just kind of like go, ha ha, yeah, buy the dip. No, you need to be very, very careful in this environment. This was, okay, so first off, like, we didn't even have a full trading day. Look at the volume. And we'll get into the SPY here. Once you see the SPY's volume on a trading day like today, you can see that there is something very serious taking place right here. So you need to be, really tight with your risk moving forward. But that was just a huge, severe move to the downside. So we'll see if there's going to be follow through, or if we're going to get a little relief bounce, and then all of a sudden we're going to get some more movement to the downside. But that is a pretty nasty move there. Meanwhile, gold, you would think that gold would benefit in this environment with the dollar falling, but it did not. The dollar, it was up, it was flat. Let's just call it what it is, right? It was 0.07%. All right, now the VIX shot up like, a shooting star. It just took off like a rocket ship, right? 54% up on a percentage basis. And we were talking previously about the potential of this being a double bottom, and it has to clear this. Well, then it broke into a wedge. We filled those two gaps, and now we shot up higher. And there's still actually a gap above us in around the 40 range. That's still a very strong possibility. And I say a strong possibility because if you look at the weekly charts, well, we broke out of the wedge that we were tracing for quite some time, right? So this weekly wedge, that is a very strong move there. And it's the highest close that we've seen really on a weekly basis since very early 2021 there. And if you take a look at the VVIX, this is the volatility of volatility. This is the highest close really since, coming out of the pandemic, really, just around that time period. So some extreme volatility coming into play. If you take a look at NASDAQ volatility on a weekly time frame, we've been saying that this has been very weird environment because the volatility has been putting in higher lows, but the S&P 500 and the other indices have been too. So we broke out of this tight wedge, and this is a very high weekly close. We haven't been at a weekly close this high since early 2021 as well. So volatility keeps on getting bid there. RVX, this is Russell volatility, and Russell had one of the worst performing days, the Russell 2000 over the other indices, and this thing shot out like a rocket ship too as well, closing right at 39 flat, and that's its highest close really since mid to late 2020 there too as well. The sell signal was triggered. The 10-day moving average crossed above 0.8. We'll see if that continues to give us a warning sign of more selling to come, right? This is where did the reading come out from? Yeah, 801, so slightly above, and we did get that sell-off that took place. So we'll see here if there is still continued movement to the downside. We'll look at the indice charts here momentarily. One chart that I'll be watching is the trend on the 60-minute time frame with the 10-period moving average. Typically, when we get a 1.5 reading, that's a good buy signal. When we get down to this, it's more of a sell signal. So if we keep selling off and this also reaches back down here, buckle up because things could get pretty crazy. From a bullish perspective, the NIAD, this is the NYSE advanced decline issues. This is a very, very oversold indicator too as well. And typically when we get these oversold readings, you know, boom, 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 right here, boom, you typically have those dips in the market and they get bought back up. Now this today, it feels different. It feels really different, right? We've been talking about the rising dollar and then all of a sudden today it sunk off and we saw this flight to safety within bonds, which I'll touch up on. And then we had oil down around 13%. So this is not something that I just want to step in front of to collect a few dollars at this particular point in time. Let's look at some weekly charts here. S&P 500, we were talking about this being bullish right here, right? But what did we say? We said, well, inside trading weeks, if it closes above here, that's bullish. But if it starts closing below, it's going to be bearish. And well, this is one big outside trading week overall, engulfing the previous 3 weeks. So that's a lot of volatility right there. We closed below the weekly 5 EMA. So what you want to pay attention to is the new, the 20-week EMA at 4,500. And then we're still well above an inclining 30-week average. And that is right at 4,400, slightly higher than that. So it's still in a bull trend, right? This is still in a bull market. However, you know, this is a pretty nasty bearish engulfing type week for the S&P 500. The Nasdaq 100, same story. Big outside trading week, bearish engulfing, closed below the weekly 5 EMA. So the bears have, you know, they can take control right here. And, you know, where could we potentially drop to? Well, keep an eye on the 30-week moving average, which is going to be around 15,000. We also have the 20-week slightly above that at 15,500. So pay attention to those key levels on the weekly time frame to potentially find pivot areas. We did pivot from the weekly 5 EMA, but that obviously got triggered down on today's price action. Now the Dow Jones Industrial Average closed below the 30-week moving average. The PMO is still trending down. This is the third week in a row that it's been down, closed below the 5 EMA, closed below the 20 EMA. This is not looking too good for the Dow Jones Industrials. The last time it had a weekly close, though, below the 30-week moving average, it sold off a little bit lower into the lower Bollinger Band, and then we bounced severely. So if that's the same script, start looking at the lower Bollinger Band for an area of support for a potential pivot, and that is at 34,171 for that as being a potential pivot area for the Dow Jones Industrials. The New York Stock Exchange, this is a good barometer, an overlook on the market. And we'll give another one of that here shortly. But the PMO has been wind at our face while we're trading to the upside. Okay, the weekly 5 EMA is pointing down, and we closed below both the 30 and the 20-week moving average. The RSI still above 50, but it is pointing down. This also, it does not look good. It looks like the bears can have a really strong chance of pushing more downwards momentum on the stock market. So it's once again, you need to be very careful in this environment. What to call out? The last time the weekly 30 EMA was weekly 30 moving average was breached and closed beneath was right here in around late September, and it sold off a little bit more into just past the lower Bollinger Band, but then quickly got ripped right to the upside. So start looking at around 16,200 for a potential pivot area there as well. Okay. The Wilshire 5000. The Wilshire 5000 is obviously a good barometer of looking at the overall stock market. And this closed below the weekly 5 EMA, a very strong looking bearish candle to the downside, but we're still above an upsloping 20 and 30-week moving average. The PMO is clearly heading down, and it's heading down south right there. So we have wind at our face from going from a long perspective. So start looking at these two moving averages for potential pivot areas. Remember, I want to call this out. There was a lot of fear going into this 30-week moving average, but we were here to call this out on the other indices, saying when we get to these levels, be ready to buy. And we got that big rip to the upside. So same thing goes here. We're still trending up. Until that changes, things are okay. And things can change, and they can change quick. Okay, don't expect it to change slowly for most cases. We've seen some pretty aggressive moves. Here's the Vanguard Total Stock Market ETF, another barometer of the overall market. I'm just looking at different ways to kind of view the overall market. Okay, big bearish weekly candle closed below the weekly 5 EMA. Weekly 5 EMA is pointing down. 20 is right below it. 30 is right below it. They're both sloping up. And you can see the 30-week moving average also acted as support prior. So those are the ones to watch. That's at 227.13 for the VTI. The German DAX down about almost 6% on the week. This severely closed below the weekly 30 EMA, the 20, and the 5 EMA. The last time it did that was not too long ago, and that was also a very bearish looking day. Now I want to keep this in mind, right? We rallied up, and it also created a negative divergence there on the DAX. Now the PMO, it's also very bearish, but it's still above zero. These type of rubber band moves, like they get stretched out, sometimes they snap back, but just be very cautious because we haven't seen this type of volatility in a week for quite some time. Let's look at some daily charts. S&P 500 on the daily time frame, tag the lower Bollinger Band, we're right there. All moving averages that I like to look at are all sloping up. However, we did just completely collide through the 20-day moving average. The PPO did have a bearish crossover, and that's pointing straight down. So it does look like we can have some more sell side taking place, at least into the 50, potentially the 100-day moving average. The SPY, when you zoom in, you can see here, that was a very aggressive kind of gap down and then the push into the lower Bollinger Band. But I'm bringing this chart up more specifically to show you that today's volume was nothing to just overlook. That's a big pull there in volume that took place. And this was on not even a full trading day. So there's something going on here that we need to just be very cautious with. NASDAQ 100, we talked about the negative divergence right here. When it came to the new high, now we're starting to see that sell side activity, but we're still in an up channel. How do we define that up channel? Well, higher highs and higher lows taking place, and the price action is still above an inclining 50, 100, and 200-day moving average as it stands right now. But we did have that bearish crossover on the PPO. It's gaining some steam right there, and we cracked through the 20-day moving average. The Dow Jones Industrial Average is one of the weaker ones. That was a pretty nasty gap down and ripped to the downside, closing below both the 50 and the 100-day moving average. Now it got below the 20, and now it's back below those two, showing us that the 200-day moving average can be the place to look at. That could be the very next pivot. That's at 34,315, and that goes into some confluence over here with this prior lows here. It's very possible to reach those areas. I will say the PPO looking very bearish, almost pointing straight down, so be very, very cautious there. The IWM, the Russell 2000, also look at that volume that came into play. Something interesting is taking place right now. Yes, big gap down, a lot of volume on half a trading day, right? And where did we go? Well, right to this middle back, into this channel right here, right? So it acts like a magnet. We've been talking about this kind of like, when it comes to the highs, it goes back to the center. You can short it, go to the middle. When it goes to the low, you buy it and go to the middle. Well, this one overshot it, breakout, and then the breakout is completely failing, getting back below all of these key moving averages right here. So be very cautious with this to see here what takes place in the weeks to come. Right now, this is not something that I want to just jump right into. I was looking at the 50-day moving average to be a pivot area back in here, and I caught a little bit of a run up there intraday, but then today, just a complete turnaround overall, down 3.77%. So just be very cautious, pay attention to this volume that stepped in. Now, from a bullish perspective, we have a nice hammer candle. The chart's getting overextended, and we might bounce. This could be just a flush out, right? Overall, the market's still very strong, but there are, like I said, some various warning signs to the point that it might want to put people, me at least, put me on a pause to just kind of step back, step out of my positions for a moment, and then just wait to see what takes place. I'm not trying to tag the perfect bottom or the perfect top. I'm trying to catch the wave. I'm trying to surf the wave that just makes a lot of sense. Now, if we take a look at crypto, Bitcoin still continuing to sell off here, right? The ratio between Bitcoin and S&P 500 crossed down through the 50 EMA. It's below the 50. It's below the 20 over here. That was a big, strong move. And, somebody had tweeted like, hey, I jumped early on your sailor to shift tool. On Twitter, they said that. And because it started curling up, and it wasn't quite above zero, but it was curling up. Actually, let me bring that up right now. right here. Now it's straight down, but it started moving down and curling up. And it actually, to me, I was like, oh, shoot, we might be getting that buy signal. But that was like a little Thanksgiving rally. And then we had, obviously, the surprise Friday. And all risk assets really did sell off. And what's crazy is Bitcoin has been talked about as being that hedge against everything, but it's really acting like the overall market. So one has to wonder if the market continues to sell off or crypto continues to sell off, if we're going to see a very similar type sell-off take place in the various indices. I don't know. I don't have that answer, but all I do have is the data that shows us that they are highly correlated as it stands right now. Ethereum also started moving up and then completely reversed itself on a very bearish day, but it's still holding around 4,000, and the ratio between Ethereum and the S&P 500 is still above an inclining 50-day EMA. So it's looking decent, but this looks like some distribution taking place. It's one of those things that you just need to be very patient with. All right, everybody. I got a few more charts to go over, kind of wrap up my thoughts overall in this market sell-off. I know there's going to be a lot of fear out there. You might be feeling that from this channel. You know, that's not why I'm here. The reason why I'm not cracking too many jokes actually specifically is because I know today probably hurt a lot of people, and you know that's not fun for anybody. People want to obviously, you know, make money in the markets, but part of, you know, trading in the markets, part of, you know, investing, you're going to have down days, and they could come as surprises, but it's all about risk management, keeping your losers small and letting your winners obviously win. And to be honest, me personally, my trading account, I was up at 4:30 in the morning. I got rid of all my positions. I just cleared them all out because I don't know what was going to take place. And I feel like everybody is trying to look for a specific answer, and they're going out there and finding it, but they're finding it what fits their narrative, and they're probably getting an answer from somebody that doesn't actually want to admit to not knowing. You don't always have to have an answer, but what you have is you have charts and you have data, and you can see visually the things that are taking place, and a lot of things today aren't making sense. Okay, the dollar down severely today, oil's down, and various other commodities are down. We had a flight to safety, obviously, in bonds. You can see that in the TLT, a big run up in bonds there. So there's some very unsettling things that are taking place. Now, what I want to get into is this. This is the SPX, and this is what the options market is pricing in as far as an expected move for next week. This is crazy. All right, so we can look a lot of indicators, a lot of interesting things, and we can get ideas as to what might be taking place behind the curtain. But if you want future, like a vision of the future, you need to understand that the markets are driven by the options market in its entirety almost. I mean, most of these markets, most of these stocks are just like Tesla, Nvidia, and so forth. It's all options based. And right now, the S&P 500 is putting in a $152 expected move going into next week. That is huge. That is beyond huge. That's bigger than I've seen all year. It might be bigger than actually some of the pandemic expected moves, actually, to be honest. I'd have to go back and check. But $152 expected move, that can take us down to around the 100-day moving average, or potentially as high as around 47.25. So expect volatility next week. Expect it. It's coming. That's almost guaranteed. It's going to be, I'm not saying that's a directional bias, and I'm not saying it's going to tag either end here, but what you can expect is big, strong moves in either direction as the market, either one, tries to find its legs, or two, if it kind of shakes off this kind of catalyst news event. Like I said, oil being down so severely in a single day like this, they call this a 6 sigma move, apparently, is what somebody from Twitter smarter than me had stated, and these happen very rarely. So this is a very, very strong move, and it has a lot of volume to support it. You had the dollar, right? That was down pretty big on the day, but it's coming down from, slightly from a very, very strong move. So the dollar gave us some insight, and we've been saying that the market hasn't been selling off at all until we had a few tech stocks obviously sell off. So a couple big names as far as the tech stocks go, keep it, or even consumer discretionary, right? Tesla is a very, very highly traded stock in the options market. And if this thing gets unwound, it was down 5% on the week, and you see this show weakness coming into next week, it's going to be hard for the overall market to really sustain itself. And you tie that in with something like Nvidia, which is also a highly retail traded stocks with just an insane amount of options. Had a bearish kind of weekly close on the candle, right? You know, dark cloud coverage. It's still above an inclining 5-day EMA, 5-week EMA, but it's getting overextended from these other moving averages. So if we start seeing weakness here and weakness in Tesla, right, that could be pretty nasty for the overall markets, being that the S&P 500 is really ran by just 7 to 10 stocks overall. Now look at Microsoft, weekly bearish engulfing 2, closed right below, right on basically the weekly 5 EMA. But Microsoft, also a huge market cap. Look where it's up from the year of 2021, right? So if this starts selling off back into the 20-week moving average, that's also going to put weight on the NASDAQ 100 and also the S&P 500. And the last one is obviously Google, right? This one, since 2021, just been on a monster tear up, and now we're starting to see some weakness. Still above these key moving averages, so it's still in a bullish trend, but this PMO had this bearish crossover here in September, so we've been trading with wind at our face ever since. So start looking. If it starts coming down to around 2,700, right? It closed on the weekly 20 EMA, and it acted as support there. So perhaps this turns around and that helps put the markets up. But it created this new high there on a weekly negative divergence. So if it does continue to sell off, expect more downside in the overall markets. All right. So just once again, wrap it up. What do I expect next week? I expect for sure volatility to be there. Monday, Tuesday, see what takes place. Be very cautious. Put your risk, keep it tight, put it together. You don't want to ruin the holiday season by getting an account that's blown up. It's about surviving in the market, right? And making money over time. Be patient because the trades will come. Don't rush into anything. Don't pull dollars, from the street right here and you have a steamroller coming in to roll you over potentially, right? Like I said, you could be a very good buying opportunity, but as it stands right now, this is not something me personally that I'm going to just be walking in front of until I see some more price action take place. That's all I got for you, everybody. Have a wonderful night.